Morning. He's Ryan Lewenza, Senior Financial Advisor and Portfolio Manager at Turner Investments Raymond James. Ryan, thanks a lot for coming in.
Thanks for having me.
Where do you stand on all this, Ryan? Where are we going in the markets? And what are your clients asking you?
Where are we going? Well, you tell me what Trump's going to tweet, and I'll tell you where the market's going to go. So if we're going into a recession, which the odds are rising with each day, then we could have another leg lower. So the S&P's off, call it 20% plus or minus. The average bear market, recession bear market for the S&P falls 34%. So if we're going to recession, we're 2/3 through this, another leg down. But as we were talking about before this could turn on a dime, right? And so what is his maximum pain point that Trump will accept? This is the million-dollar question if you could get in his brain. The further this goes in the markets, the more that this escalates, the more that we see the data start to rise in the inflation, the more pressure he'll have to turn.
Do you think in weeks or months ahead, if U.S. economic data deteriorates in a big way, higher inflation, slower growth, weaker business and consumer confidence, that we would see the White House pull back? Well,
you would have to assume that, right, as a rational person. Mm-hmm. So this was kind of the crux of my recent blog that I talked about is, so what are they trying to solve for? Let's back up. What is he trying to address? Number one is the unfair trade practices, right? So there's higher tariffs for U.S. goods. Number two, the trade imbalances. And he's trying to get some more tax revenue. And trying to re-onshore U.S. manufacturing. Those are some of the main aims. So he's trying to implement this tariff war to, bring back U.S. manufacturing. But if your actions lead to a global recession and or inflation rising, what does it matter if you bring on 2-3 million manufacturing jobs if you lose 15 million tech jobs? So it's going to be that epicenter, that nexus of the market's decline, the economic data coming in, and him saying, boy, we've miscalculated, now we need to change course. The problem is will it be too late, and then we've already got a recession? Like, this is my big concern.
When you say recession, are you talking U.S. recession, global recession?
I'm talking a U.S. global recession. Mm-hmm. Nobody wins in a trade war. This is what we have. All you have is somebody loses more than the other. Clearly, I think China would lose more in this trade war. They obviously, they're an exporting nation. And this is the argument that the U.S. is making, is that we'll, on a relative basis, outperform China. But what does it matter if you have the unemployment rate go from 4% to 7%? Great, congratulations, you won on a relative basis. People are now out of work.
Will markets rebound sharply if they get some tangible signs of more rational economic policy from the United States? On Monday of this week, we saw the market soar for about 20 minutes on what proved to be a false report about a 90-day freeze.
Absolutely. The markets will have a rip-roaring recovery. It probably won't recover all of the losses that we've incurred from the peak. That will take some time to recover. But you will get a rip-roaring, rip your face off counter-trend rally as soon as you de-escalate. And that's the problem with this, is, well, how do we trade around? How do we invest in around this? Is that on a dime it can change. So you could say, okay, I'm going to sell right now. I'm down 10, 15%. I don't want it to go down a little bit more. And then 3 days later, he puts out a tweet and says, look, I just got a great deal with Europe. We're currently talking with China. We've got a deal with Japan. I'm the greatest president. Market's up 7-8%. Now you're chasing higher. So now is a time to not making any big moves. And hopefully you have, at the starting point, you have a more balanced portfolio like we like to espouse. I think we'll talk about this today. Mm-hmm. And that you're just going to have to kind of ride through these gains, ride through these losses.
That's Ryan Lewenza. Up next, we will indeed